Hello everyone, my name is Haluszka. I'm an insurance broker with a Wealth State Insurance Brokerage here in Mississauga, Ontario. Today I would like to talk about what is a mortgage insurance with the bank versus a term life insurance with the insurance company. Welcome, stay tuned. So the time has finally come. You've purchased your dream house. You're sitting with your mortgage advisor and she asks you, would you like to insure your mortgage? And you're thinking, should I go with the mortgage insurance that the bank offers, or would a term life policy be better for my family? And today I want to explain those options for you. Mortgage insurance with the bank basically protects your outstanding debt. So if your mortgage is $500,000 right now, your mortgage insurance would cover you up to $500,000. If you pay off your mortgage in the next couple years and it goes down to $400,000, your mortgage insurance would still pay out only the outstanding debt. So it will pay out $400,000 instead of $500,000, the sum that you were insured from the beginning. Your fee that you're paying for your mortgage insurance does not decrease. So your fee stays the same, but your benefit basically goes down as you pay off your mortgage. On a term policy, if your policy is, let's say, $500,000 to protect your mortgage and your term covers you for the next 20 years, your $500,000 death benefit continues during the whole policy time. The death benefit does not decrease, it stays level, stays the same, and so are the premiums. They do not change, they stay level for the whole duration of the contract. On the mortgage insurance with the bank, you cannot design the beneficiary. So the beneficiary basically is the bank. If you have a mortgage with Royal Bank would be the beneficiary on your mortgage life insurance. So God forbid if something happens to you or to your spouse, the money will be paid directly to the bank. It wouldn't be paid to anybody else, regardless of what you want to do with the house. On a term life insurance, you can design your own beneficiary. So for example, if you take out a 20-year term for $500,000 and you name your spouse, your husband, as the beneficiary on the policy, and let's say in 5 years from now or 10 years from now, your mortgage decreases to $300,000 and then something happens to one of you, that beneficiary would still receive $500,000 from the insurance policy where he can pay off the debt, which was $300,000 to the bank, and the rest would stay with the beneficiary, which can be used for anything else. Let's say you come up for a renewal on your mortgage in 5-year term. You cannot transfer your mortgage insurance with the bank to another financial institution. You would have to reapply and go through medical questions again. A term policy stays with you regardless of which bank gives you the mortgage. So it's fully transferable. The policy is basically written under your name. You're the owner of the policy. Nobody has the right to cancel the policy for you. The most important aspect between a mortgage insurance with the bank and a term life insurance is that mortgage insurance with the bank is being underwritten at the time of the claim. All the medical questions, medical history, your medical files can be asked at the time of the claim when you're no longer around to actually defend yourself. They have the full right to go back to your physician and check if there was any pre-existing medical condition before you actually purchase the plan. The whole process takes approximately 4 to 6 months. So before the process is closed up, your policy will not be paid off. So your spouse has to continue paying for your mortgage. A mortgage insurance under the term with the life insurance company is being underwritten at the time of application. It's not a quick process. It does take a little bit of time, usually around 3 weeks, depending on the amount of the mortgage that you're applying for. The insurance company does check your past health history, checks your family history, might have any additional questions, might contact your family physician. The underwriting process is done before you even start paying for your policy. They just want to make sure that you're healthy and nothing should happen in the next 20 years, which makes at the time of the claim very easy for the beneficiary to receive the money. So there are no surprises at the time of the claim. And the last thing that I wanted to tell you about is the rate. The mortgage insurance with the lender comparing to a term life insurance with the insurance company, there is a big difference in the price. the term life insurance is approximately 30, sometimes to 60% less expensive than the mortgage insurance with the bank. Before you sign your last paper, if you want to get the protection directly with the lender, please do a little bit of research, Google it, call a friend who already has a policy, call a broker, ask your family member, and I'm sure you're going to be able to make the right decision. Thank you very much for watching. Please subscribe to see my future videos. I am located here in Mississauga, Ontario. You can find me on Instagram, Facebook, you can contact directly, or you can visit my page, which is www.12state.ca. Thank you.